I'm broadcasting today from Silicon Valley, California. It's the only place you can do a summit from because it has the world's best broadband. Perish the thought if I ever had to do this at Lake Tahoe, where you not only lose broadband, but electricity on a regular basis. So I'm going to talk about why technology will be the first to bounce back. And, the answer is obvious. That is the sector that everybody in the world is going to want to get back into when we go from a risk off back to a risk on environment. Let me give you the 90,000 foot view. First, technology stocks have been slaughtered. Ouch, 6 months for the big ones and 16 months for the small ones. In many cases, price earnings multiples have dropped by half or more. That makes tech the new value play. A turnaround in tech could be imminent and the semis will be the leaders. Best tech entry point in a decade is at hand. To cash in, you must know which names to shoot for and guess where you can go to get that information. So let me play the video. Why listen to John Thomas? Well, I have 53 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, time out as a Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, 14 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who's still working. Take my half century of trading experience and add it to your own. Learn from my trading mistakes so you don't have to repeat them. And believe me, there have been plenty. Oh, and if you ever need a ride up to a 9,000 foot in a hot air balloon in New Mexico, I am your man. So let's move on from here. So who is John Thomas? Well, if you're going to spend an hour with me, it's best to find out who I am. My family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American childhood, playing Little League baseball and becoming an Eagle Scout. There wasn't much to do in the old days in rural California, but hunting. So I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I found stock pages, bought IBM at 20 and sold it at 30, suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I had visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions, where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian stock market. Ta-da, I was then suddenly in stocks. After 10 years of government service, all I ended up was this box of medals, which I trot out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund, and that's me losing the All Japan Karate Championships. Warning, do not enter a karate final with a broken wrist, which I did. Ouch. This is my original Morgan Stanley ID card from 1983. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, has a really big impact on your lifestyle. You get to do things like fly your own private plane around Europe, collect the latest hot car, go marlin fishing in Mexican, and collect vintage Rolls Royces. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the Diary of a Mad Hedge Fund Trader 2008. Boy, it sounds like a million years ago. I now spend my days pursuing my first love, finding winning trade alerts. But I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There is far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I could take a $50,000 account and turn it into 500,000, that is more job satisfaction than I could ever get anywhere else. However, every silver lining has a cloud. This is what I had to pay in taxes in 2020, some $8.2 million on a $20 million trading income. Thank goodness I can pay that amount of money and not have it make a dent in my lifestyle. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to wounded warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. And there you can see me going through my in-laws' house, which completely burned to the ground. You can see there's a SIF box right here where they were looking for a wedding ring, which they eventually did find because it was made out of platinum, which has a much higher melting point than gold. It's one of these little details you learn trading commodities for 50 years. So tech is the seminal investment theme of our lifetimes. And although you may have some doubts now that we've had these horrific declines, 80, 90% in the worst cases, it is still true. Our technology-driven economy still exists. That's where the money will be made. Go anywhere else and you're taking a risk. So the more you can learn about tech now, the better it'll be, because it's much better learning about tech when it's cheap than when it's expensive, which is when most of you got into the game. Since World War II, tech has rocketed from 1% of US stock market capitalization to 27%, and it's on the way to 90%. Eventually, all companies will become tech ones or cease to exist. Over 50% of new retail sales have been online in 2020, with one company, Amazon, accounting for half of the growth. And that is accelerating. The earnings of tech companies are growing at double the rate of non-tech ones, and the profit margins are growing exponentially. Technology sector has been the top performer since the 2009 market bottom and will continue to do so for the rest of this decade. And if you're wondering who that is, that's not me, that's Charlie Chaplin in the movie Modern Times. COVID-19 was a huge accelerator for technology. It accelerated all pre-existing trends in the economy tenfold, bringing the future forward by a decade and boosting creative destruction at an incredible rate. Money is moving out of old into new, bricks and mortar into digital, non-tech into tech. Technology is a huge beneficiary of all these trends. After the worst economy in a century, who gains? Well, innovation at tech companies has exploded. Many companies are rushing to handle sales increases in the hundreds of percent. Productivity at all other companies is soaring just to stay in business. US economy coming out the other side of the pandemic and the recession, by the way, will be far more efficient and profitable than the old one. Surviving stocks will soar in tech and biotech as the leaders. Next big dip is the one you buy, and that may have been the dip that we got on Monday and Tuesday. So could be at the bottom here. If we're not at the bottom, it's not very far away. So get ready to put your buying boots on. Let's take a look at NASDAQ. A year ago, we had NASDAQ at a 25 times earnings multiple. We're down to only an 18 multiple now, even though the stock market has dropped by, let's call that 16,000 down to 10,000. So that is, ouch, 35%. And that may look expensive, but guess what? This 200-day moving average is going to provide huge support. So why has tech crashed? Well, thanks to massive liquidity infusions from the Fed, tech share prices outran their earnings growth by a huge margin, leading to big overvaluations. That meant a correction was desperately needed in both time and price. We got both, with big caps pulling back 25%, smaller speculative shares off 75% or more. Those with the best earnings outlook, like ad-driven Alphabet and Apple, will lead the next breakout. Smaller stocks like Palantir and PayPal may have to wait years to recover. All adds up to the best tech entry point in a decade, maybe the last one you see this decade, and maybe even your lifetime if you're as old as me. So let's look at NASDAQ again, 16,000 down to 10,000. We could drop as low as 9,000, worst case scenario, or another 15%. But after that, we're looking at nearly a double here, and possibly by the end of the year. We could go up to 14,000 or more by the end of 2022, and that bull market should continue into 23 and get us our double off the bottom. So get into the following sectors right now. Artificial intelligence. AI is permeating every aspect of modern society, especially the trading of stocks. AI will determine the success or failure of all products and companies from now on. Trade the market without an AI-driven algorithm at your peril. AI tied in with big data now leads almost every major corporate sales and marketing initiative. The AI big data combo will also cure every major human disease over the next decade, creating $8 trillion a year in cancer cures alone. Okay, let's see, Palantir specializes in very large databases. The stock has been absolutely creamed. It's in the 80% category as far as declines go. You can buy it now here at single digit. So on the next decent sell-off, I'd be picking some up, because then I have an upside target of $40. Which is a 5-fold gain or more. So buy the dips on Palantir. This could be a big winner. Global X Robotics, or the BOTS ETF, is another one. It has also been crushed, and I'm looking for a target there of $20. Cloud-based applications. All major companies are now shifting to cloud-based applications. Let's see. Exponential growth of data means physical on-site storage is becoming impossible. There is no place for it to go but the cloud, where capacity is unlimited. Massive cloud growth is creating enormous demand for new internet infrastructure. Cloud-based service providers are one of the fastest growing technology providers. The problem is security. How safe is it? And there you're looking at Salesforce, Microsoft, and Amazon. Salesforce is my favorite pick in the bunch. Looks like it's already got a serious bottoming process going on. We're looking for the stock to go from 164 up to a near double of 300 by the end of the year. Once this stock gets the bit in its teeth, it really gets going. Cybersecurity. As the global economy moves online, so the theft of its most valuable properties. Cybersecurity is an arms race, with the stake rising daily. And of course, a possible cyber war with Russia any day now greatly increases the value of these companies. It's a great setup for investors with a small number of companies facing exponential growth of demand. Most large companies use all of the big three cyber companies to cover their bases and mitigate risk. Hacking is one of the few recession-proof industries in tech. That's important, as we may already be in a recession. We just don't know it yet. And again, we're looking at Hack, Palo Alto Networks, CyberArk, and Okta. This is Palo Alto Networks. I've had this thing for about 7 years now, and it just constantly delivers. I'm looking for an upside target of 800 a share from 420. Buy Palo Alto Networks on dips. CrowdStrike, cutting edge cybersecurity, is another name we want to look at here. CRWD. It also has the potential of a near double up to 250 in 6 months by the end of the year. We're looking for enormous gains in this sector by the end of the year. Autonomous driving cars. The military was the early spender on autonomous driving, and we'll get a ton of new money for R&D. Point-to-point self-driving Tesla is only a year away. Hardware is already being installed on new models now. Current applications are only good on freeways and for parking, and that is an $8,000 upgrade per car. Tesla, Google, Uber, and Apple are all striving for the lead. Worker productivity will soar. Accident rate goes to zero, crushing insurance companies and hospitals. So who will be the low-cost, high-volume producer? So far, Tesla is the overwhelming winner. Google has a 92% of all online advertising. They are also a huge beneficiary if their own entry succeeds in the autonomous driving area. Here in the Bay Area, you see the Google mapping cars all over the place, preparing the world for autonomous driving. Google, incredibly cheap now at 2,100. I'm looking for a target of 3,000. Online commerce, Amazon is taking over the retail world with 50% of all new online sales, and COVID-19 has given it a turbocharger. Only another Amazon like Alibaba could challenge it. Antitrust or other government intervention won't challenge it anytime soon. If it does, the value will double. Amazon Web Services is the 800-pound gorilla you can't see. New business lines beckon like drugs, healthcare, and entertainment. And of course, Amazon been absolutely destroyed in the last 6 months. You're getting, it's kind of hard to adjust these prices because they just did a 20-to-1 split last week, but we're now down in the hundreds. Again, unless you had a time machine, you went back to 1999, you wouldn't see these prices. But I'm looking for a move back up to 170 from its split adjusted price. And even if the government doesn't step in with antitrust concerns, Amazon is likely to break itself up anyway because it's getting too big to manage. Also, making an extra $1 trillion is another great incentive. Just a matter of time before we see this happen. That's why they're building a second headquarters. The retail business will grow from 600 billion a year to 2 trillion. AWS goes from 400 billion to $1 trillion. Advertising goes from 10 billion to 100 billion. Other businesses like food, healthcare, and so on grow from 0 to 300 billion. That gives you a $4 trillion company by 2023. Then it breaks itself up and sells off each entity separately for a 50% premium, making it all worth 6 trillion. So yeah, fantastic trading opportunity here for the next year or two. Internet infrastructure is going to be important, building the hardware that makes tech work. Any progress in a single tech subsector increases demand for all the others. This creates an exponential growth curve for the entire tech industry, which is how it has come to account for such a large part of the US economy so quickly. Tech is growing so fast that it's creating a jump in demand for semi-skilled, blue-collar, and other support jobs as server farms and high-speed transmission towers cover the country. You no longer need a PhD from MIT to get a tech job. And there you want to be looking at Cisco Systems, Intel, and Skyworks. My favorite in the sector here is Cisco, and it has also just been destroyed, dropping by nearly half. I think if you come in here in the low 40s, you could be looking at a double by the end of the year. Buy Cisco on dips. Big data applications, also very important. The mining of massive databases with AI is now becoming possible for the first time by both government and private industry. Understanding how to access and manipulate this data is the key to understanding the future of marketing, scientific research, and the weather. Even politics. IBM's Watson can read all the scientific papers on cancer ever written in 8 minutes, enabling unprecedented levels of cross-referencing, and we're now on the 3rd generation of Watson. Big data needs new software applications to enhance understanding and massive server farms to house the data. Now we're looking at Google, Meta, Microsoft, and Amazon. Microsoft is my favorite here. We actually have a double position in this right now. And one of them expires at max profit on Friday. So again, if you can get in down here, we're looking at $400 by the end of 2022 by Microsoft. It's one of the safest stocks out there. And how often do you see a situation where the safest stock is offering you a 50% or more gain over the next 6 months? It doesn't happen very often, let me tell you. 5th generation wireless technology, or 5G, is another big field. Big telecom like AT&T and Verizon are investing $30 billion to assure 5G wireless rolls out this year. Increasing wireless broadband capability will increase performance of many products and services by 10-fold, such as your cell phone, for example. It will bring a new generation of super fast smartphones and other wireless products. Apple brought out its 5G phone in October 2020, and sales have been going gangbusters ever since. Suddenly, many experimental technologies like autonomous driving and AI will become functional and cheap. Download a 2-hour movie on your smartphone in 10 seconds. I know that used to be unbelievable, but it's now common. And in this area, you're looking at, Verizon, Xilinx, and Ciena. And here is Ciena Corp, stock just destroyed, down in the 40s. I'm targeting $60 by the end of the year for Ciena, the top telecommunications networking equipment company. Next, we have to look at microprocessors and GPUs. Yeah, I know a lot of you already know where this one is going. Play of the worsening global chip shortage, which isn't going away even with a recession. Detroit still can't get the chips that it needs. Look for enormous moves up on the rollout of 5G, creating an acute global chip shortage as chip demand increases 10 times. In a highly cyclical chip industry, chip producers are now facing unprecedented shortage for their products. This is enabling companies to increase margins in a rising market. Barriers to new entrants are extremely high at $2 billion a factory and 2 years to build and climbing. GPUs are leading the charge into AI. Industry is consolidating at a tremendous pace, further increasing pricing power. There you want to look at NVIDIA, Micron Technology, and AMD. And of course, the front runner here is NVIDIA, an AI and graphics card leader, the next trillion-dollar company. We have already caught a 90-fold increase in this stock since 2015, from 4 to, well, actually went to a high of 350. And they are continuing to increase their lead in the business. So buy NVIDIA on this dip. I highly doubt you'll ever get an entry point this good. I'm looking for $300 by the end of the year. That's a near double from here in 6 months. Fintech, or financial technology, is turning legacy banking into the next buggy whip industry. Huge, expensive brick and mortar branch networks make it impossible for banks to compete with overhead light fintech companies. Blockchain is creating encryption for transaction security on an industrial scale. Regulation-like companies have the unfair advantage you are looking for. Paper money carries COVID-19 out, so many stores have banned cash payments. And of course, Square and PayPal, the two big names there. And My favorite right now at this level is Square. It's dropped from close to 75%. I'd be buying down here at 60, looking for a move to 150. And I have the PayPal logo on the Square slide. So obviously I made a switch on the names in the fintech area. Smartphones and their apps. Apple will see monster sales with their new Generation 5 phone. 1 billion iPhones need to be replaced globally. Smartphones are a global market with plenty of room for growth. China and India will be the next big buyers of smartphones, and a new pro-trade administration will be a big help. However, the largest player, Samsung, still has only a 7% market share. Apple dominates with 92% of all industry profits. Most people don't know that, which is luring customers up the value chain. Apple and Skyworks are the ways to play this. And Skyworks Solution, being a much smaller company, have much greater volatility. You can certainly see this in the share price. It's dropped by half this year. If you can get in at the 92 level, we're looking for a move to 150 by the end of the year. Blockchain technology. While the media is focused on cryptocurrencies, the real groundbreaker here is blockchain technology. Blockchain could eventually replace the entire banking system, could also spawn a global currency run by governments. It will be those who sell shovels to the gold miners who will make the big money. Blockchain is creating incredible new demand for every new corner of internet infrastructure. Security is still the big issue, with theft a constant problem. And there you want to look at IBM, NASDAQ, and STX. Here's the NASDAQ chart. You're basically buying shares in the casino, and you can expect a massive increase in trading volume on the exchanges. NASDAQ NDAQ is a great way to play that. So I'm looking for a gain from 145 here up to 190. And of course, its stock's been getting slaughtered because exchanges do poorly in bear markets. So this is basically a call option on the end of a bear market. Share buybacks are another tech supercharger. $1 trillion have to be spent on company buybacks by the end of this year. Almost all share buybacks during the pandemic, except in big tech, well, they almost all ceased, except in big tech, where they're moving full speed ahead. Technology companies are spinning off profits so fast, they're creating massive cash balances. Most prefer organic growth, so money isn't being wasted on takeovers. Dividend demands of a low interest rate world are minimal. 75% of all share buybacks take place in tech. When the supply of shares falls, the price can only go up. And there you're looking at the biggest share buyback companies in the market, and that's Apple, Microsoft, Micron, and Intel. Who knew? Apple, of course, number one, 250 billion in cash. They publicly announce how much stock they're going to buy back every quarter. So when you are buying Apple, you're in competition with the company in buying its own shares. If you sell Apple, always a big mistake, then you're probably selling the shares back to Apple itself. So I'm looking for $200 a share next year or by the end of this year, and that would be a 70-point gain from here. Also, Apple has so far held up remarkably well in this bear market. So with a blistering earnings growth rate at the end of COVID-19, it's just a matter of time before tech stocks bottom out and break out to new all-time highs. Watch this space melt up big time going into the end of 2023. Get ready to start reeling in those whoppers with the Mad Hedge technology letter as your guide. And that's me that is a 24-inch rainbow trout, which I caught in Pyramid Lake in northern Nevada. Fortunately, it was catch and release. So no trophies here, and I hear they don't taste very good anyway. Mad Hedge technology track record is a proven history of delivering blockbuster trade recommendations. In-depth research reports on the target company and industry will follow shortly. Get in on the early stage of every big trend. Let a 50-year technology veteran translate his experience into winning trades for you. And that's me at the Pebble Beach car show a few years ago. Secret to my success, of course, is my Mad Hedge Market Timing Index. That's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. Ours took a team of mathematicians 1,000 hours of calculations to create. Does the work of a seasoned 100-man research department in seconds, runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. And this morning, our indicator was at 17, meaning it's an extremely strong buy territory. When you get up to close to 80, that's in sell territory. This is 3 years of profit predictor performance. You can see we get lots of buys at market bottoms, lots of sells at market tops, buy, sell, buy, sell. It's a money-making machine. This is how it works. Our algorithm here predicted a major upside breakout was coming for Micron technology. So we sent out a trade alert that looks like this. Buy Micron technology at 42.01 or best, opening trade, and for a $10,000 exposure, you needed to buy 238 shares. What happened? Well, in 15 trading days, we got a 15.63% move up. We got another signal. What did we do? We sent out another trade alert saying, take profits, sell the Micron technology at 48.58 or best. And on this trade, an exposure of $10,000 earned us $1,563 in only 15 days. So let's go through our Hall of Fame here, a history of 10 baggers or more. We got Zoom Communications up 10 times. Lam Research up 10.6 times, Moderna up 12 times, NVIDIA up 90 times, as I mentioned earlier. Square, we got a 25 bagger on that one, and Tesla, the granddaddy of them all, up 400 times from our original $3 recommendation. And it is true that if you buy the Tesla stock, you get the car for free. That's because you'll make so much money owning the stock, you can get a free Tesla out of the deal. I know I bought 3 of them with my profits, and this is my latest Model X. This is my first one, chassis number 125 off the assembly line. Unfortunately, a drunk driver in a GM Silverado had other ideas about the future of my car and tail-ended me. I used the opportunity to completely take the car apart and see what made it work. A lot of people talk about Tesla, very few take them to pieces. Back here, you can see the 1,000-pound lithium-ion battery, which in 5 years will only be 100 pounds. Here's the carbon fiber honeycomb wheel wells, which make it the safest car in the world. And you currently have the side of the car made out of aluminum. In a few years, those will all be carbon fiber, which will make the car much lighter, faster, and cheaper. That is always the trend at Tesla: lighter, faster, and cheaper. Oh, you might throw in cooler also. Cooler definitely works. So I'm offering you the Mad Hedge Technology Letter, the one sector you must absolutely follow on a daily basis. 3 times a week, read of the most important developments in technology, giving you the best stock plays. Includes time-sensitive trade alert service sent out at market sweet spots, about 150 a year. This year, we're probably going to do about 250 trade alerts. We're grinding them out like there's no tomorrow because of the market volatility. It's research by dedicated technology analysts based in Silicon Valley. It'll send you immediately actionable trading and investment ideas on every important stock and subsector in technology. Finally, the detailed understanding of technology you have long been searching for. You need a real pro to guide you through the technology maze. Not all tech is monolithic. There are both great tech stocks and awful ones. You can earn a 10 times return on the great ones, but get wiped out by the lemons. A lot of tech stocks go public right when earnings are peaking and their business models are about to die. I've seen it happen a million times. Why you need me to stay up to date? You could copy the ticker symbols from this webinar and probably do okay for a few weeks. However, technology investing can be notoriously volatile. No kidding. Look at this year. Today's darling can be tomorrow's goat. Just giving you today's popular names is like handing you a book of matches in a gasoline factory. Boy, I wish I had a gasoline factory right now. Let me keep you current on the latest earnings reports and developments. It's the best way to max out your profits. With our service, you get the Mad Hedge technology 3 times a week, giving you the greatest insights in the greatest sector of all times. You also get daily our Mad Hedge hot tips, the 5 most important things that happen in the market today and what to do about them. And you also get our Leap service, which we bring in at major market bottoms. Leaps are long-term equity anticipation securities. It's a strategy to multiply your tech profits from 5 to 100-fold. They minimize your risk while maximizing your profits. It's an ideal strategy for high-growth companies. Give you a very low risk with a very high return. Only issued when the highest growth, best quality stocks reach extreme oversold conditions, kind of like now. It is where the big money is made in tech, and believe me, we have made monster money in tech. I had one guy last year turn $1 million into $84 million. Had another guy start out with 100,000. He took it all the way up to 3.5 million. That is the kind of result you can get with Leaps and the right guidance on which stocks to put your Leaps into. This is an example of one of our trades that worked. I bought the Tesla 130 January 2023 call options, bought them for $10 when Tesla shares were trading at 100 in 2020. Break-even point was 140 and the share price up 40%. Tesla shares then rose $900. The net profit worked out to 7,600%. With high growth companies, a 30% gain is no problem in a year. 2-year expiration makes it a no-brainer. Now you can see how people turn $100,000 into 3.5 million. These are real numbers from real trades I took from real customers. You'll need 1 out of 10 of these to work to get spectacular gains. In fact, 9 out of 10 of these work for us. In reality, most of our Leaps are huge winners. This is what my trade alert service can do for you. 84.73% trailing 1-year return and an average annualized return of 44.56%. That is 2.56%. The S&P 500. And look at this year. While the market has been crashing all year, we have been going straight up. So we go up when the market goes down. Last year, the market went up and we went up. So up when the market is up and up when the market is down. Most people will take that strategy and those results all day long. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my major hedge fund clients for advice on the technology sector, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge customers for personal one-on-one counseling, so I can act as their investment 911. And I'm not going to charge you $2,500. This is the regular price on my website for the Mad Hedge technology letter. Today and only through this webinar, costing this product cost me millions of dollars. With the best customer service in the industry, running it costs me millions more. Here's the offer you can't refuse, 6 months for just $998. This is for new subscribers only. It's a one-time only 60% discount to the full price. Just click on the chat box on the right, and that'll take you to a dedicated sales page with today's offer. With your subscription, you will get a 3 times weekly newsletter highlighting the most important developments in tech, immediately actionable text and email trade alerts sent out at market sweet spots, live coaching through a bi-weekly strategy webinar and interactive Q&A, same-day answers to emailed questions about specific tech companies, special reports on the dominant trends and players in tech, access to a technology 14-year database. Gaining an unfair advantage is the most important investment theme of your lifetime, will be the best decision you ever made. Here's the offer you can't refuse. Let me show you how to make the money to pay for your own subscription. 90% of our subscribers cover the cost of their subscription on the first trade alert. No kidding. Buy now and you will instantly receive a technology trade alert with an extremely high probability. And damn, it's already starting to move. Let me check the price. Oh yeah, that worked totally. 95% of these trades make money immediately, don't leave good money on the table. And that is the chart of the trade alert you are about to get if you subscribe to our service. You have to go through 1,000 charts to find one this good. Let me do the heavy lifting for you. Is this a buy or a sell? Well, you have to buy the service to find out. We only take 25 new subscribers at a time, so it's first come, first served. That's because we don't want to overwhelm the market with too many people trying to execute the same trade alert at the same time. Just click on the chat box on the right. Okay, let's go balloon flying again. When you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, tickets to the Olympics, and dates with movie stars. So as in that spirit, I made my way to Albuquerque, New Mexico to participate in their annual balloon festival to meet my concierge subscriber, James Branson. When I first met James years ago, he was toiling away trying to make a cattle ranch in Arizona pay, unsuccessfully so. He signed up for my entry-level global trading dispatch, then my technology letter, and started booking winning trades by the dozens. Only took him a year to upgrade to my concierge service, where he started making the real money. After only 4 years, he'd made enough to sell his ranch and pursue the love of his life, hot air ballooning. Set up a business to take tourists into the air, starting out with a modest 6-passenger balloon. By the time I met him, he graduated to a monster 16-passenger airship that was at least 100 feet high. It was a crystal clear morning when he let me pilot the balloon up to a breathtaking 9,000 feet over the New Mexico desert. Let me make millions of dollars for you as well, as I have done for thousands of other followers over the last 14 years. I look forward to working with all of you. And there's my friend James right there. After yet another successful balloon flight, we landed in a subdivision that was under construction. They had to race the Caterpillar tractors to get out of the way so we could land. And boy, look at that tan. That's the tan you get when you do hot air balloons for a living. That was a great day and my kids loved it. So here's the offer you can't refuse, 6 months for just $998. This is for new subscribers only. Just click on the chat box on the right. And we have a few extra minutes to the Fed decision and to the end of the hour. So why don't you go ahead and put your questions in your chat box and I will try and find it. I have a missing chat box again. So let's see, chat. Okay, I found it. Ta-da, that was easy. Okay, well, here's a nice comment. Hi, John. I was the first one to sign up with your offer yesterday, and have to say the Tesla position you suggested is now profitable to the extent of $200. You also hinted about Meta, so I took a long position there and exited 60% of my position already in one day with an 11% profit. Still holding 40% of my position. Looks like these two trades will pay for my subscription. Thanks. And the balloon fiesta is awesome. I live here. Okay, John. Let's see. Well, this is from there's no name on this one, but thank you very much for the kind comments. Mark, here it is. Mark, yeah, I'm not kidding. 95% of our subscribers cover the cost on the first trade alert. I can tell you the first trade alert is ready to go. The second you subscribe to the service, it'll be in your inbox. And since the market is still open, you can execute right now. So yeah, go ahead and do it. But we only take 25 at a time, and these blow out the door really quickly. So I would move post haste on this. Let's see, do you like Amazon? It's getting beat up down here, and the answer is yes. We may not have hit the bottom on Amazon, yes, but on a 1 or 2 year view, you're looking at a double in Amazon. So it really is a case of 10% of pain, 100% of upside, and that is the case for a lot of the best quality tech stocks. Any price forecasts on Bitcoin? That's easy. If it breaks 20,000, we're at 20,100 right now, it'll go straight to 10,000. So I am avoiding Bitcoin. It'll rally someday, but with no history for the instrument, the automatic instinct of everyone right now is to sell. And here's another question. John wants to work for a small trading account, say $2,000. The answer is yes. We have students trading from their dorm room beds with $500 accounts. The smallest position we generally recommend, one contract costs $400. So yeah, anybody can get into this, and you can find very quickly that once you start making money, you start appreciating capital at a tremendous pace. Okay, any other questions here? Okay, here's one. I want to subscribe now. Is the discount automatic? And the answer is yes. We only have the $9.98 price in the store right now. Click on the chat box on the right. You can see there, madhedgefundtrader.com/tech. That'll take you to the dedicated sales page, and I'll get you your $9.98 offer.